Well, the headlines, I think, basically are wrong. When you say we're in a sluggish market, it's only sluggish compared to the bull market of 2021, which was post-pandemic. So I think, a sluggish market, we're still probably better shape than we were in 18, 17, 18, and 19 before the pandemic. And just even in the last couple of weeks, the tracking of contracts over $4 million in New York City. 2 weeks ago, there were 8. Last week, there were 21. So I think that things are pretty stable. The high-end market performing probably somewhat better than the more moderate markets. But again, and as it relates to interest rates, yes, you can worry a lot about interest rates. But the fact is, you have an inverted yield curve. And really what that shows is that at some point, rates are going to be coming down.
Howard, I'm curious, talking about the high-end market, what kind of deals are we seeing? In that, are we still seeing all cash deals? Are we still seeing a lot of contingencies being waived like it was a year ago? Or has that crazy hotness moderated?
No, that has moderated, but that surely doesn't make the market sluggish. I mean, how long can a market, if you look at Florida, for instance, and you look at Palm Beach in particular, those prices were up 50 to 100% in 1 year. So how long can that continue? So and they're not even going down now. They're just moderating in price. No more big price increases, and more inventory now starts to come on the market. And that's when it starts picking up again.
Yeah, I was going to ask you about inventory, Howard. How does that look right now? Because if people have been reading the same gloomy headlines, you say they're misleading, that I've read about the U.S. housing market, maybe they don't feel like they want to sell. But what do you expect to see then in inventory?
Well, again, just to start with, sluggish is a state of mind, okay? And what do you compare it to? So I think it's pretty much unfair for a lot of people just saying sluggish, because, again, it's only sluggish compared to 2021. Right now, typically what happens during the summer months is the inventory builds up. The inventory goes down because brokers are telling customers people are traveling. It's not a great time for sellers to go on the market. And then all of a sudden, comes September, after Labor Day, more inventory comes on the market, and more inventory coming on the market brings more buyers into the market. And as it relates to the high end, I can only tell you that we sold 3 apartments that were 2 for around $75 million and 1 for $50 million this year so far.
Wow. Okay. That's a lot. So can you just help me understand then, if we go from hyper growth, then there's the normalization bucket, then there's an actual slowdown. You definitely feel like we're not in a slowdown yet. Obviously, you feel like we're in sort of maybe a normalization. Do we get to a real material slowdown if the Fed keeps hiking? I know what you said about the yield curve, but if we're looking at 4% plus for a terminal rate, do we get a sluggish housing market?
This country for so many years has been on the short end of housing supply. So I don't think that is going to happen. I think that, again, the realization is that markets can't keep going up. There may be some slowdown, but I don't believe it's going to be a big slowdown. I think it's just going to be a normalization.